Hi everyone, welcome back to the channel. You guys are watching CryptoStack. In today's segment, we're going to be covering for you guys. We're going to be putting head-to-head corporate portfolio events ETF, corporate portfolio events mutual fund, and corporate portfolio events robo-advisor. We're going to be reviewing what are the pros and cons, and obviously we're going to be giving some more tips on how to choose the right investment for you. So stay tuned. So corporate portfolio is an eToro investment fund through which you can invest in a group of assets. It bundled together a group of thematic assets. These assets are strategically managed and supervised from time to time. Okay, it's a very simple term. Now there's different type of corporate portfolio. You have a market corporate portfolio, you have eToro partner, then you have eToro top traders. Now there's a minimum where you can actually enter and invest. It's start from $1,000. There's certain fund that might be $2,000. There might be some other fund where it's $5,000. Now the good thing about corporate portfolio is that there's no fees. What is mutual fund? Mutual fund are the type of investment in which a lot of different investors come together to combine their funds for investment in stock, money market, bond, and other assets. Money managers do the handling of mutual fund of investor. It's their job to invest the money of investor strategically and produce profit. Mutual fund can be an investment or a company in itself. It means that you can invest in mutual funds themselves. If you are investing in mutual funds, then it means investing mutual fund job is to make investment in other assets through which you'll be generating your profit depending on the progress of mutual fund themselves. Mutual funds are managed by the manager hired by the mutual fund company. The job of the manager is to handle the fund and make an investment that is good in terms of making profit. So far, so good. So there's three things you should probably know is that at the end of each year, the investor are given a check based on the profit. And another thing you should know that they can actually sell their shares if they want to, or they can actually buy more if they want to. Those are the three things you should know. And when it comes to the mutual fund fees, there is a fee that varies between 1% to 3%. Now let's compare corporate portfolios and mutual fund. So they have a lot of things in common. So first of all, both of the shares can be bought directly. So in this case, if you're looking at corporate portfolio, you can buy directly from eToro. If you're looking at mutual fund, you buy directly from the fund. They are managed and supervised from time to time when it comes to corporate portfolio. And when it comes to mutual fund, they are executing, if they need to execute any trade, once a day. So this is something for you guys to consider. There's no tax advantage in either for mutual fund or corporate portfolio. Now the only thing you should remember is this. Corporate portfolio has no management fees, and then when you look at mutual fund, there is something called expense ratio fees, which vary between 1% to 3%. Now let's look, our next thing we want to compare is ETF. So ETF stands for an exchange traded fund. It is similar in many ways to stock. It deals with stock of several different companies at one time while tracking an underlying index. So instead of focusing on one stock of a particular company, in an ETF portfolio, you have the option to invest in several different stocks. It can be traded throughout the day like stock. So at any time during the day, you can buy and sell ETF. So how does it work? ETF deal with different stock of different companies. You can buy and sell ETF share through online brokerage company or directly through an exchange. Now let's try to explain how our fee of ETF calculated. So the ETF are also charged management fee, but this fee is lower as compared to mutual fund, but it's similar to mutual fund. Investors don't have to pay the fee directly. It gets deducted from the investor fund automatically after the investment has been made. So in theory, there is a fee which you don't think about, but they actually are deducting from your profit if there is any profit. Now let's compare corporate portfolio versus ETF. So let's look. So Corportfolio, you have access to several different stocks of many companies, similar to ETF. It gives you a diversification tool, which is amazing. There's no tax advantage when it comes to Corportfolio. When it comes to ETF, there might be some tax efficiency or some tax benefits depending where you're based. So obviously you need to take that into consideration. Now, the Corportfolio has no associate fees, but you also need to know that there is something called spread. So whenever they're actually going to open the Corportfolio for you, there's going to be a spread, which is the difference between buy and sell, which is being deducted. And then whenever they do rebalance, they have the same process will happen again. And then when you look at ETF, there's obviously the fees that are being deducted before they are incorporated into your investor asset. Now let's try to look at Robo-Advisor. What is Robo-Advisor? So Robo-Advisor is an online digital platform that uses algorithm to determine your financial situation and your investment goals through an online survey. It is only supervised by any human. It is not supervised by any human, but through smart algorithm. It analyzes your data and then recommends the best investment strategy for you. This is obviously something for you guys to know. So let's see how it works. So first of all, you need to sign up to the account and then obviously fill in the survey, answer all the questions, obviously your investment goals, how much money you want to invest, and how much you want to start, your risk and everything, and based on that they give you some ideas. Now let's compare Corportfolio versus Robo-Advisor. So let's look at this. So for both of them you don't need any knowledge. It's time efficient for both cases. It's a very simple strategy to implement. You obviously will understand it. So if you look here, Robo-Advisor don't usually have so much option, and when you look at Corportfolio, last time I checked, they have over 40 different strategies when it comes to Corportfolio. And there's a Robo-Advisor fees, and for the management fees of eToro, it doesn't exist. Now, let's try to recap everything you just said. So, ETF, it's an amazing solution. It gives you a lot of exposure to invest in stock without investing in one specific stock. It's liquid. You can buy and sell at any given moment throughout the day. And when we look at mutual funds are usually, it's a closed mutual fund, maybe it might be open, where you actually are only getting the profit once a year if you made a profit, and you might be able to share your share of the mutual fund to someone else. So this is, if you want to look at mutual fund, there is probably quite a high starting point. Some cases it might be $50,000, some cases even $100,000 or even $1 million when we compare mutual fund. And then we have the Robo-Advisor, which is probably more retail oriented, which is very simple. You literally fill in the form, they ask you a question, what is your risk appetite, how much money you want to invest, and then they basically give you a tailored strategy which you obviously can understand, and then basically invest some money. Side thing you should probably know about it is that they charge a fee. So when we compare to all of these different amazing investment vehicle, the only thing you can actually summarize is that Corportfolio doesn't have any fees, and others do have certain fees, and it might be more relevant for you guys to maybe invest in ETF if you are looking for more tax efficient, or if you are in a country that Corportfolio does not support, maybe a Robo-Advisor will be a good solution for you guys. So I hope this video was helpful for you guys. Until next time, bye bye.